Good morning, good afternoon. Welcome to the 79th Emerging Growth Conference and day one of our two-day super virtual investor conference. I'm Anna Berry. Just a few notes. Today we're running until 4:30 Eastern. When we switch to the next company, you'll see a black screen for a moment. Don't go anywhere. That's just us moving over to the next presenter. If you experience downtime, refresh your browser. Everything usually works properly once you do that. And our platform does work best on Google Chrome. So if you're watching from an Apple device, you have to hit the play button to start the session. Now, all of our conferences are uploaded to the Emerging Growth Conference YouTube channel. So please subscribe, youtube.com/Emerging Growth Conference. And now today, during each company's presentation, you can submit questions through the webcast module, and the presenters will attempt to address as many of these as possible at the end of their presentation. Happy to begin with our first company today. We have B.O.S, originally known as Better Online Solutions Limited, trades under the NASDAQ ticker symbol BOSC, and is a profitable, growing technology-enabled supply chain solutions company to large global defense, industrial, and retail customers. B.O.S integrates cutting-edge technologies to streamline and enhance operations through advanced robotic automation technologies, RFID inventory management, and franchised supply chain components directly into customer products. Happy to welcome the Chief Executive Officer and the presenter today, Eyal Cohen. Welcome to the conference, Eyal.
Thank you, Anna. Good morning, everyone, and thank you for taking the time to join this meeting today. I hope that by the end of this session, you will have a clear understanding of B.O.S operation, our growth strategy, and why we believe our company represents a strong investment opportunity. So let's get started. As Anna mentioned, B.O.S integrates cutting-edge technologies to streamline and enhance supply chain operation across three specialized divisions. The robotic division automates the inventory process by replacing handwork with the robot. RFID division optimizes inventory management by marking and tracking inventory through the supply chain. And the supply chain division does integration of its franchise electromechanical components into our client products. Let's dive into each division by sharing videos. First, our first division, our supply chain division, is committed to integrating our franchise electromechanical component into the products of leading defense and high-tech companies. Our engineering team works closely with the customer's R&D engineers to ensure seamless integration of our components into their cutting-edge design products, securing long-term OEM revenues as their products move into production. The key driver of our growth is the number of components we embed into our clients' product. Therefore, expanding our component integration is fundamental to our business strategy. Over the past 2 years, we have doubled our engineering team and tripled the number of manufacturers we represent, strengthening our market position and the growth potential. We are proud to serve global defense leaders such as the Israeli aircraft industry, Elbit System, and Rafael as our primary customers. Our supply network extends both directly to these companies and indirectly through the subcontractor worldwide, covering USA, India, and multiple European countries. These strategic clients also serve as our gateway to international sales, allowing us to expand globally without the need for costly regional sales offices. The second layer of our solution provided by our RFID division that enhance inventory management across the supply chain by integrating our proprietary software with cutting-edge off-the-shelf equipment. We deploy ruggedized solutions for industrial and logistics operation, including handheld computers, forklift-mounted tablets, industrial scanners, thermal printers, RFID readers, and wireless access systems from leading manufacturers such as Zebra and Honeywell. Through our proprietary interfaces, each on-site inventory transaction is instantly reported to the client ERP, WMS or MES, ensuring real-time data flow and accuracy. As a complementary service, our professional team conducts inventory counts in warehouse and stores, typically twice a year, using our specialized equipment and proprietary software. The division business model is designed to generate recurrent revenues beyond the initial equipment sales. These ongoing revenues include the annual service contracts for hardware and software, inventory counting services, and continuous demand for consumables such as barcode label, RFID tags, and thermal printers, ribbons. For decades, we have been the trusted provider for the Israel's leading and largest enterprises across multiple sectors. Our major clients include Supercell with its 300 stores in the food retail sector, IKEA in the non-food retail sector, and Teva in the industrial sector. The third layer of our solution is provided by our robotic division that streamlines industrial and logistics inventory processes by automating routine labor-intensive activities. Our team includes mechatronic systems engineers, mechanical engineers, electrical and control engineers, software programmers, and a dedicated production team specializing in mechanical assembly and wiring. Together, we provide robotic cells designed to reduce workforce dependency, increase production capacity, and enhance accuracy in inventory and logistic processes, and all while ensuring a return on investment ROI within 3 years. Our robotic cells are categorized into two types. The first is the custom-made robotic cells that we design and build unique, tailor-made robotic machine from scratch to meet specific client needs. The second type is off-the-shelf robotic arms that we integrate from leading arms of robotic arm from leading manufacturers such as Fanuc, Yaskawa, and we develop custom-made grippers and peripheral equipment and program the robot for production or logistic processes. These solutions are primarily used for machine tending, as we see in the video, where robot replace human operation in serving production machines, and palletizing, optimizing logistics centers' efficiency. The robotic division has successfully transitioned to the defense sector, with 90% of our projects serving this rapidly growing market. The current production process in the defense industry relies heavily on labor and is struggling to meet the increasing demands for large, higher quality, and shorter lead time. This transition is a call to action for the industry to embrace robotics processes, an opportunity for us to grow our business. The robotic division flagship client is Elbit Systems, a global leader in the defense industry. Additionally, we serve prominent clients from the Israeli high-tech sector, showcasing our expertise in developing advanced robotic cells tailored to industry needs. Financial. Following an exceptional year in 2023, with $44 million revenues, our revenues for 2024 are expected to stabilize at $40 million. The surge in demand seen in 2023 was driven by companies rapidly replenishing inventories after COVID-19. In year 2024, purchasing patterns have normalized as businesses return to typical consumption and inventory management practices. Looking ahead, we are optimistic about our growth prospects for year 2025, driven by our strong presence in the global defense market, particularly in Israel. This confidence is further reinforced by our expanding backlog, which grew by 15% to $23 million as of September 24, compared to $20 million at the end of year 2023. As a result, we are targeting revenues of $44 million and net income of $2.4 million in year 2025, representing a 10% increase over year 2024 targets. A significant factor driving our growth is a substantial portion of our revenues derived from the defense sector, an industry experiencing strong and sustained expansion. For example, the Israeli defense budget grew by an impressive 73% between the year 23 and 24, and the European defense budget increased by 16% between the year 22 and 23. This budget increase direct impact on our major clients, such as the Israeli aerospace industry, Rafael and Elbit, and subsequently on us. As defense spending continues to rise globally, we are well positioned to capitalize on these opportunities and drive future growth. B.O.S. growth strategy is twofold, based on expansion overseas and strengthening our proposition. Growth overseas, we aim to expand our international sales by leveraging our strong relationships with the Israeli defense customers who operate globally. By aligning with their international activities and offering tailored solutions, we are well positioned to capitalize on new opportunities in the growing global defense market. This strategy has already borne fruit with $6 million in overseas sales achieved in year 23, and a recent agreement finalized with subcontractor in India and 2 in Greece. Furthermore, our robotic division is set to install a production line in Europe during the first half of year 25. The second layer of our growth plan is to strengthen our proposition. We will continue to strengthen our relationship with our strategic defense customers by broadening our offering and ensuring that we meet their evolving needs. The IFRD division that engage in the civil market will grow through acquisitions of complementary business or competitor, as we successfully did several times before. Our team. B.O.S. team includes 4 board members, 3 of whom are independent, and one of whom is me. B.O.S. executives include 8 members with various skills and extensive experience in sales, marketing, technology, operation, and finance. Because cutting-edge technology is a substantial foundation in our proposition, we engage 2 CTOs, one for the robotic and one for the RFID. B.O.S. has engaged 83 employees, of whom 30% are engineers and technicians. Valuation. Let's start with the balance sheet. As of September 24, our balance sheet reflects total assets of $32 million, equity of $21 million, and net cash, meaning cash minus loans, approximately $1 million. Our market capitalization currently stands at $23 million based on 5.9 million outstanding shares and stock price of 3.9. When we adjust for cash and debt, we have $2.2 million cash on hand, which we deduct. We also have $1.4 million bank loans, which we add back. This loan, by the way, was specifically taken to finance the acquisition of real estate for our own use. So after this adjustment, our enterprise value comes to $22 million. Valuation comparison. There is a significant valuation gap between B.O.S. and Russell 2000 index ratios. Price to earning, PE ratio of B.O.S. is 11 versus 19 for Russell. Price to book value ratio, 1.1 for B.O.S., 2.4 for Russell. This highlights that B.O.S. is trading at a substantial discount compared to a broader market valuation. Recently, and for the first time, B.O.S. was covered by an analyst report. According to the recent research report released by Think Equity, the target stock price for B.O.S. is $5, which is 30% higher than the current stock price. That led me to the investor relations activities. That increasing B.O.S. exposure is a key priority in bridging the valuation gap. To achieve this, We recently engaged a US-based investor relation firm to strengthen our presence in the US capital market. Since September last year, I've been conducting weekly investor calls to actively share our story and engage with the investment community. In addition, over the past 3 months, we have participated in 2 investor conferences, further expanding our reach. These efforts are specifically aimed at attracting public market investors and driving long-term value creation for all stakeholders of B.O.S. The impact of these initiatives is already evident as our average daily trading volume has surged from 4,000 shares a day in September last year to 61,000 shares average today. To conclude, B.O.S. is strategically positioned for growth, driven by our expansion in the defense sector, recurrent revenue streams, a strong balance sheet, and an attractive valuation, making it a highly compelling investment opportunity. Thank you for your attention, and Anna, I'm ready to take your question.
Wonderful. Thank you, Eyal. Let's go back and talk a little bit more about how much of your business is linked to the defense market.
Approximately 50% of our total revenues are directly linked to the defense sector. This includes the sales to the Israeli aerospace industry, Elbit system and Rafael, and also indirect sales through their subcontractors worldwide, including USA, India, Europe, and many subcontractors in Israel as well. Our target is to continue to increase this portion significantly in the coming years, year by year, as we did in the past.
Well, like we were talking about a little bit earlier, what would happen if peace occurred in Israel? Finally.
Yeah, finally.
Deep question.
While geopolitical tension in the region have remained largely unchanged for centuries, or even for the recent 3,000 years, I truly hope that the peace will come in the future. However, even in such a scenario, several key factors that the strong demand from the defense sector will persist for the coming 2 to 3 years at least. First, replenishing the Israeli Defense Force warehouses, which are currently empty, and it will take between 2 to 3 years to complete it, to our estimations. Second, increasing military spending across Europe will continue to drive demand for defense-related products. And third, the recent munition embargo on Israel during the conflict have accelerated the government decision to increase local production instead of relying on imports. This decision directly benefits our robotic division, which is already working with Elbit Systems, Israeli leading munition provider, to build a new automated production lines. So, since our key clients are major supplier both to the IDF and global defense market, we anticipate sustained demand for our supply chain division embedded components and for our robotic division solution to increase our clients' production. So in summary, even in a peaceful scenario, long-term trend in the defense spending for the coming 2 to 3 years will continue to drive our growth in the defense sector.
Well, good to hear. And so you reference the Israeli defense industry quite a bit, and you also do some work with retail and industrial customers. So is the defense industry your main business opportunity, or are you growing your non-defense customer base as well?
Yeah, the defense industry is a major growth driver for B.O.S, and we put our most attention to this industry. And we have significantly our presence in this sector in the recent years, with approximately, as I mentioned, 50% of our revenue is now linked to this the defense sector. That said, our business is well diversified and we continue to see growth opportunities in the civil market as well because of the war end and the expected rebound in the Israeli economy in year 25, which we already see strong indicators for this rebound in order flow in the first quarter of this year.
Fantastic. And you mentioned the recurring revenues in your business model. So what percentage of your total annual revenues is recurring?
Recurrent revenues exceed approximately, it exceeds 60% of our total annual revenues. As I mentioned in the presentation, the revenues comes from ongoing OEM order of electronic components, software and hardware service contract, inventory accounting services, and ongoing sales of consumables like barcode label, RFID tag, and thermal printer ribbons under the RFID division. This recurrent revenue model provides long-term stability and financial predictability for our business. And our main goal is to increase this percentage year by year by adding more product that can serve our existing client.
Now, your target for 2025 is 44 million. What's the visibility of this projection?
Our $44 million revenues target for year 25 is backed by a strong visibility, primarily due to the strong growth momentum in the defense market, as we see, and with more than 50% of our businesses in open position with this segment. In addition, as of September 2024, our backlog amounted to $23 million, which predict the revenues of year 2025, and is account for more than 50% of our annual outlook. Adding to that, the recurrent revenues that exceed 60% of our annual revenues, so we remain confident in achieving this projection for year 25, and we are working on year 26.
Wonderful. And Eyal, you mentioned an acquisition strategy to scale the business. So what type of companies would you like to acquire, and how large of a transaction are you targeting?
So we are actively seeking the acquisition of companies that offer complementary products and solutions for our existing customer base, as well as competitors, as an approach that we have successfully executed several times in the past. The target acquisition must be profitable and have immediate and significant positive impact on our revenues and net income as well. In terms of deal size, we are targeting acquisition of up to $5 million for controlling stake. And the financial structure of the deal will be that 50% of it will be financed by bank loans. The remaining 50% will come from mix of cash and the fundraising, cash on hand that we have. And the working capital requirement will be supported by our unused credit line that we actually have. This acquisition strategy is designed to scale our business while maintaining financial discipline and delivering strong return for our investors.
And so if you do win a new contract, how is the revenue reorganized? Is it recorded all at once or over time? And is there a difference between how revenue is reorganized for robotics versus defense or the RFID contracts?
Yeah, we recognize revenue upon delivery in general, in accordance to with the contract terms and according to US GAAP rules. The supply chain in RFID division deliverable are typically completed within 1 to 3 months. Although in some cases, particularly in the supply chain division, deliveries may be extended over 1 year. In such instances, revenues is recognized incrementally as deliveries occur. The robotic division delivery timelines are longer, typically ranging from 6 to 9 months due to the complexity of a custom-built robotic system. and the revenue is recognized upon final delivery and installation. This structured approach ensures that the revenue recognition aligns with our contractual obligation and the delivery schedule and the accounting rules as well.
Now, let's ask this question. We just have a few minutes left. So most of your business is defense-oriented, but how come none of your board members have a strong military background?
First, all the Israelis have a military background, but that's a valid point. We recognize the value of having a veteran with senior military experience on our board. We plan to make adjustment to our board composition to include a defense industry veteran, which will further strengthen our relationships, which is very important with the sector, with the key person in that sector, and support our continued growth in the defense market. It's a very valid point.
And a question to close pretty much, talk about who your main competition is out there and what are the selling points of your technology?
In each division, we have a competitor, but if we compare ourselves to other competitor in each division, I think the wide offering that we offer as a group to our client is the strength point of B.O.S. And many clients of us, like IAI and Elbit, are customers of three of our division, of the robotic division, of the supply chain division, and of the IFRD division as well. This is a certain point that we have, and we continue to expand our offering to our client in order to strengthen our position in the market.
Wonderful. And are you on a fiscal year? What is your year end?
Our year end is it's December 31, and we will announce on the year end results by the end of March. We already announced it.
All right, wonderful. Eyal, do you have any closing remarks for our viewers today?
Thank you for your participation. Please feel free to contact me. You can get my contact information. And thank you for your time. Have a great day.
Wonderful. Thank you so much. We look forward to following you with some more updates in the future. Thanks for joining us today.
Thank you.
All right, everyone, we'll be right back.